Let me tell you something, friend. The market doesn't care about your feelings, your plans, or your hopes. It only cares about what is. And what is will take your money if you let your emotions trade your account. That's a lesson I learned the hard way. The 100,000 mistake that taught me everything I needed to know about myself as a trader. You remember, in the previous video on 9 trading mistakes that guarantee failure, we talked about the dangers of overconfidence, of not cutting losses, of believing you're smarter than the tape. Well, I didn't just know those mistakes. I lived them, every one of them, and the bill came due one fine morning when I watched $100,000 vanish faster than a puff of smoke on Wall Street. Now, let me take you back. I'd been trading well, too well in fact. Every position I took seemed to go right. Every dip looked like a buying opportunity. Every rally looked like a confirmation of my genius. You ever had a streak like that? The kind where you start believing the market works for you instead of against you. That's the most dangerous time in a trader's life, when success whispers in your ear that you've figured it all out. I was long in a stock that had been running for weeks. The chart was strong, volume was high, and the trend was as clean as a fresh dollar bill. But I didn't notice the exhaustion, the subtle weakness in the tape, the way buyers were thinning out, the way price was hesitating. The market was talking, but I wasn't listening. I was too busy admiring myself. Then came the break. It started small, a 1-point drop, then 2. Just a pullback. I told myself, it'll bounce. It didn't. I watched it fall point by point, hour by hour, and instead of selling, I held. Why? Because I didn't want to admit I was wrong. Have you ever held onto a loser just because your ego couldn't take the hit? That's not trading. That's gambling with pride as your stake. When it was all over, I'd lost $100,000. Not because the market was unfair, not because I was unlucky, but because I broke my own rules. I ignored my stops, I let my emotions drive, and I paid the price. That loss hurt, but it taught me more than any winning trade ever could. The truth is, big money isn't made in the market by being right. It's made by being disciplined. You've got to cut your losses when they're small, and you've got to let your winners ride. But more than that, you have to understand why you make the trades you do. Are you following the tape, or are you following your hopes? The market rewards the former and punishes the latter every single time. That 100,000 loss forced me to rethink everything. I stopped chasing tips. I stopped listening to opinions. I started watching the market, really watching it, the way a hunter watches his prey. Every tick, every volume spike, every hesitation in price meant something. You learn to read the mood of the market the way you'd read a person's face. You start to see fear and greed written right there on the chart. Do you know what I realized then? Every trader loses money, but not every trader learns from losing money. The market charges tuition, and some folks keep paying the same class fee over and over. I paid mine once, and I made sure I got my education. You can't buy wisdom, but the market will sell it to you at a high price. That's what that loss was, the price of knowledge. It taught me to respect the tape more than my own opinion. It taught me that no one, not even Jesse Livermore, could dictate what the market should do. The tape tells the truth, and when you learn to trust that, you stop needing anyone else's advice. Think about this for a moment. Are you trading to prove you're right, or are you trading to make money? Most people don't even realize the difference. The first kind of trader argues with the market, the second listens. Which one are you? After that loss, I began to build a new kind of mindset, one rooted in patience, detachment, and precision. I didn't chase moves. I waited for the market to invite me in. When the chart showed me clear accumulation, I bought. When distribution appeared, I sold. No emotion, no hesitation, just the tape and my judgment of it. And here's the key. The money I lost was gone, but the knowledge it left behind became my foundation. Every fortune I built afterward had that 100,000 mistake beneath it like bedrock. You see, in trading, your losses are your teachers, not your enemies. The worst thing you can do is lose money and learn nothing. That ties back, in its own way, to what we discussed in the previous video. Those 9 trading mistakes that destroy a trader. One of them was not analyzing your losses. I learned to study my losing trades with the same care I gave my winners. Because inside every bad trade is a good lesson waiting to be found. The difference is whether you look for it or just lick your wounds. I'll tell you another truth. The market rewards character as much as it does skill. You can have all the charts, all the data, all the fancy tools, but if you don't have self-control, you'll give it all back. Money flows to the trader who can sit still when others panic. It flows to the one who knows that patience is a position too. You ever notice how the biggest moves happen after everyone's already tired of waiting? That's the market's way of testing your resolve. Most traders lose, not because they can't find good entries, but because they can't wait for good exits. Greed and fear, those are the only real enemies you'll ever face. That 100,000 mistake cured me of both. It burned away the arrogance and left me with discipline. It taught me that every trade must have a reason, a plan and an exit, before you even put your money in. Because once the trade's live, your emotions take the wheel, and the wheel doesn't steer straight when fear and greed are fighting over it. And so, when I look back now, I don't see that loss as a failure. I see it as initiation. The price of entry into the ranks of real traders. The market took my money, yes, but it gave me understanding in return. Understanding of how to think, how to wait, and how to act only when the odds are in my favor. Every big mistake, if studied, becomes a blueprint for mastery. I didn't always understand the truth. I had to earn it the hard way. Most traders think the goal is to avoid mistakes, to stay so sharp and so cautious that they never stumble. But that kind of thinking keeps you small. You can't learn from what you never face. The market has a way of teaching you lessons that no book, no mentor, and no theory can ever replace. When you make a big mistake, I mean one that burns, one that leaves a mark, you're being handed a personal map of where your weaknesses live. The question is, do you study that map, or do you crumple it up and pretend it never happened? When I lost 100,000 in one trade, it wasn't just money that disappeared. It was my illusion of control. I had believed I was immune to error because I'd been winning, and that belief nearly ruined me. The mistake forced me to stop trading for a while, to step back and look at the wreckage with clear eyes. I wrote down every decision, every hesitation, every moment I ignored my own rules. Do you ever do that? Sit down after a losing trade and dissect it line by line. Most don't. They move on too fast, blaming luck or bad timing. When the truth is staring at them from the chart, I started to notice something interesting. My biggest losses didn't come from bad analysis. They came from good ideas that I executed badly. The setup was there, the signal was clear. But my timing, my position sizing, my exit discipline, that's where the cracks showed. The market doesn't punish you for being wrong, it punishes you for staying wrong. I had stayed wrong too long. That mistake became the foundation of my next phase as a trader. I built rules to protect myself from myself. Every loss, when studied, reveals a pattern of behavior. You'll see it if you look close enough. Maybe you cut winners too soon because you're afraid to lose profit. Maybe you add to losers because you can't stand being wrong. Maybe you chase trades because you can't stand being left out. Each of those habits has a signature, and each big mistake highlights it in bold. That's what I mean by a blueprint for mastery. It's not about the chart, it's about you. The market mirrors your psychology. When you lose big, you're looking at a reflection of your own weaknesses. Do you know the difference between a losing trader and a seasoned one? It's not luck or intelligence. It's how they handle their mistakes. A losing trader hides from them. A seasoned trader collects them like evidence. Every blown trade, every wrong call becomes a case file. You study it, you note what went wrong, and you adjust. That's how mastery is built, one scar at a time. The pain of a mistake can either destroy you or refine you. The choice depends on how honest you are with yourself afterward. You can't master trading without mastering your response to loss. And you can't do that if you keep chasing perfection. I used to think mastery meant eliminating mistakes entirely. Now I know mastery means understanding them so deeply that you rarely repeat them. The market will always find new ways to test you. That's its nature. But the lessons you've learned from your worst days will become your armor. When you've already faced ruin once, small losses stop scaring you. You start to trade with clarity instead of fear. I remember reviewing one losing streak where I'd made nearly identical errors in judgment 3 times in a row. Same setup, same emotional trigger, same outcome. It was maddening. But I didn't throw away the charts. I printed them. I studied the timing of each entry, the position size, the moment I ignored the stop. The pattern jumped out at me. I was entering too early, trying to predict rather than confirm. I wanted to be right more than I wanted to make money. Once I saw it, I adjusted. I began waiting for the tape to confirm my idea before I moved in. That small shift changed my entire trading career, and it came straight out of a mistake. The irony is that success in trading doesn't come from being perfect. It comes from managing imperfection. Every big mistake you make exposes the next layer of your psychology. It shows you what kind of trader you really are, not the one you pretend to be. Some people say the market has no mercy, but I think it's the fairest teacher there is. It gives you immediate feedback. You don't have to wait weeks or months to know if you were right. The truth is right there in the price action, but you have to be willing to face the truth without denial. Ask yourself, what did your last big loss teach you? Did it reveal impatience? Overconfidence? Maybe you ignored the broader trend because you were too focused on a single candle, or maybe you let someone else's opinion override your own judgment. Those details matter. They're not just trading errors. They're windows into your decision-making process. When you correct those, you don't just improve your trading, you improve your thinking. In time, you'll notice something powerful. The same mistakes that once cost you thousands will start costing you almost nothing, because you'll catch them early. Your awareness sharpens. You begin to sense danger in the market the way an old sailor smells a storm before it hits. That's mastery. It doesn't mean you never lose again. It means your losses stop teaching you the same lesson twice. Overconfidence blinds traders faster than ignorance ever could. You see, ignorance at least knows what it doesn't know. It's cautious, humble, and uncertain. But overconfidence, that's a silent killer. It sneaks up right after your biggest wins, whispers in your ear that you've mastered the market, that you've finally cracked the code. And once you start believing that, the market doesn't even have to trick you. You'll do the job yourself. I've seen it happen to good traders, smart traders, disciplined traders. And I've been there myself. The irony is that overconfidence doesn't come when you're losing. It comes when you're winning. After a streak of profitable trades, you stop respecting the danger. You start to believe that your touch turns everything to gold. The charts stop looking like puzzles to be solved. They start looking like confirmations of your brilliance. Have you ever caught yourself looking at a setup and thinking, I can't miss on this one? That's the first sign of trouble. The moment you think you can't lose, you've already begun to. When I was younger, I'd hit a few big trades in a row and start thinking I had a sixth sense for the market. I'd increase my position size, loosen my stops, even start taking trades outside my usual strategy, all because I thought I was in the zone. That false sense of invincibility would build like a fever, and then, out of nowhere, one trade would turn against me, and I'd freeze. I wouldn't cut the loss. I'd tell myself it was just a pullback, that it would recover. That's overconfidence in action. It replaces logic with ego, and ego never lasts long in the market. The funny part is that overconfidence feels almost identical to confidence, until it costs you. Confidence is quiet. Overconfidence is loud. Confidence makes you follow your plan. Overconfidence makes you believe you don't need one. Confidence respects risk. Overconfidence forgets it exists. That thin line between the two separates traders who last from those who burn out. When you're overconfident, you stop seeing warning signs. The tape might be slowing, the volume drying up, but you tell yourself it's noise. You stop asking questions. You stop testing your own conclusions. You trade as if the market owes you success. Do you know how many fortunes have vanished because someone thought the market owed them something? Too many to count. The root of overconfidence is simple. It's comfort. When you win too easily for too long, you start mistaking luck for skill. You stop sharpening your edge. You start defending your ego instead of your capital. That's when the market steps in to humble you. Because make no mistake, it will. The market doesn't reward arrogance. It punishes it swiftly and without apology. I remember once reading my charts with absolute conviction. The setup was perfect, or so I thought. I doubled my normal position, convinced the trend would continue. And at first it did. The price climbed just enough to make me feel smart. Then it stalled. Then it reversed. The signs were all there. Lower highs, weakening momentum. But I didn't want to see them. My ego filtered the truth. The market was talking, but I wasn't listening. I was too busy admiring my reflection in the screen. You ever been there? That's the blindness of overconfidence. Seeing what you want instead of what's real. When that trade collapsed, it wasn't just my capital that took the hit. It was my pride. I learned something vital, that day overconfidence isn't cured by humility alone, it's cured by process. I went back to basics. I set position limits I wouldn't break. I made rules about when to size up and when not to. I started keeping a trading journal, noting not just my entries and exits, but also my state of mind. If I felt euphoric, if I felt invincible, I forced myself to step away. Because that feeling, that sense of being untouchable, it's poison in disguise. Overconfidence thrives in the absence of structure. When you don't have a solid trading plan, emotions fill the gap. You start trading based on feeling rather than signals. The market becomes a mirror for your confidence rather than your competence. And the moment the mirror cracks, your account follows. That's why the best traders are often the calmest ones. They know the market owes them nothing. Every trade stands on its own. Every day starts at zero. Do you know what keeps me grounded now? The awareness that the market doesn't care who I am, what I've done, or how much I've made. The market doesn't remember my wins, and it doesn't forgive my arrogance. It only reflects my behavior. If I stay disciplined, it rewards me. If I get cocky, it takes everything back, sometimes with interest. That realization stripped the emotion out of my trading. I stopped celebrating wins as if they meant something about me. A good trade is just a good trade. No more, no less. The biggest trap of overconfidence is that it blinds you slowly. It doesn't happen overnight. It builds quietly, one successful trade at a time, until you stop checking your rearview mirror. You stop calculating risk, reward ratios because you believe everything you touch turns to profit. Then one bad day erases weeks or months of progress. I've seen traders double accounts in 3 months and lose it all in 3 days. And every single time, the cause was the same. They thought they were smarter than the market. Overconfidence can't survive in the presence of curiosity. When you stay curious, when you question, observe, and test, you keep your humility intact. That's why I always tell traders to stay students of the game. The moment you think you've mastered the market, it changes the rules. The market doesn't care about your confidence, it cares about your discipline. And discipline is born from respect. Respect for the risk, respect for the process, respect for the tape. When you treat every trade like a test, you stop being reckless. You learn to let go of the need to be right and focus on being consistent. You stop taking credit for random luck and start giving credit to preparation. That's how you guard yourself from overconfidence. By anchoring every decision in logic, not emotion.